Now, our next panel is tackling open innovation as well as its impact on the consumer. And this particular discussion is entitled Shaping Consumer Experiences Through APIs and Open Banking. Please welcome onto the stage, returning and making his second return, Leo Lippis, the Chief Executive at Lippis Advisors. Our moderator for this particular discussion, Chantal Maritz, the partner in strategy, at PwC, Werner Pike, the head of product at Electrum, and Moritz Pretorius, the chief strategy officer at PASA. Ladies and gentlemen, your panel.
So we are the lucky winners of the graveyard shift. So thank you very much to the PASA team for a phenomenal conference and the graveyard shift. We really do appreciate that. But we will definitely keep you entertained because this portion of the panel is actually about you sitting here, the customer. So I think it's really going to be interesting because we're going to speak about what we're going to do to make their lives better. So no better conversation. And I'm joined today by a fantastic panel, so industry experts that needs no introduction, but I really think it would be a good idea just to go through some of the introductions and set the scene for the discussion today. But before we go into the detail of it, I just want to think about open banking and what it actually means. So open banking is an opportunity, but it's also a really good story. It's a story of hope. Because if you think about all the countries that open banking has flourished in, there's really been economic growth. You can see the GDP of those countries has really, really changed. Now, we in South Africa, we need GDP growth. And we really need a good story. So let's hear this good story and let's see what it means for us. So let's start with Leo. So I know you've had a lot of talk time, but we want to give you a little bit more airtime here today. So Leo, if you think about open banking, I know you've got a lot of white papers that everyone's going to pop into their Google searches shortly. Which white papers, especially the PSD3 one that you've recently also released. What is your headline when you think of open banking that you could leave with the audience that sets the scene for the conversation today?
Well, thank you. First of all, it's nice to be in this seat rather than that one for a change. It's nice to be answering the questions rather than asking them. So I've been a cheerleader for open banking for a long time. I've been a cheerleader for real-time payments for even longer, and I actually think the combination of the two is quite remarkable. And the combination of the two opens up possibilities that don't exist for either one of those solutions individually. And the way in which we've seen that develop in certain parts of the world has been quite remarkable, I think. Some of the examples you cite, what's happened in India with the UPI, which is an often cited example here, what's happened in Brazil with Pix, what's happening in parts of Europe with request-to-pay solutions, with remittance solutions in India, for example, with P2P solutions in many parts of the world, including here in South Africa. So I think that those are what are really driving those developments. And I want to latch on to one thing that I heard Herman Singh say yesterday. He talked about hyper collaboration, right? And it's exactly those kinds of solutions that are enabled by this technology. And I think they're absolutely critical to the future of the industry and absolutely critical to the future of payments more broadly.
Definitely. And we're going to unpack that in more detail because I think it's important to understand the various examples and how we can make it real. Because today is not only about hearing the stories, it's about the practical application in country, because that's what the audience wants to hear. They want to know, what are we going to do in South Africa to realize open banking? So to realize it, Werner, let's go to you from your perspective. And I know as the head of product, you are thinking about these things every day. You are waiting, and I know in the earlier discussion, people are saying, are people releasing specs? Are people doing this? What are they doing? So from your perspective, how do these things be made real? How do you practically execute some of these use cases that Leo was talking about?
Good afternoon, and thank you for the opportunity. We've had the opportunity over the last year or so to be involved in a small way in the launch of Pipc Pay. And from that, we've been able to learn certain things. In particular, what happens when one of these API-enabled services really scales. So, like, what is it that you need to be ready for when one of these things achieves escape velocity? And there's a piece of it that really is just kind of, hold on for dear life and, hope you survive it. But there are some things that from that come out. The first, but separate to the technology part, is the first thing to me is that it has to serve a real material need. Otherwise, you end up with a situation where you have a nice prototype, but it doesn't really do anything. So more important than other factors to me is this question of have we identified a very clear real need? And I have an opinion that in South Africa there is a desperate need that is very, very clear that where this concept is needed. Once we go from there, there are some, and as a technologist, I can sort of mainly speak to the technology parts, but there are a couple of building blocks. And the good news with these building blocks is that the majority of them are in place. And I'll mention three. The first is that we now know that a mobile handset is reliable and trusted. So that's just a settled fact. The second is we also know that the internet is reliable, and if you design correctly for it, it's secure. And then my opinion is that the last thing that is critical to getting this type of thing off the ground is real-time clearing. And what I mean here is not RTC, the RTC rail, but in particular, straight-through processing. Mm-hmm. Now, there are other bits that can come onto it that then can add value onto it. So, for example, things like digital ID and eKYC and those types of things. But I really think that those three fundamental pieces, which we already have and that are already at scale, all three of them, is absolutely fit for purpose for what we're trying to achieve here.
Thank you for that. And I think you mentioned some critical milestones or critical elements. But for those critical elements to work together, it needs to work in an ecosystem. And I think, and I reflect back to the previous panel spoke about the customer being at the core of it, which it was actually a cash panel, but they spoke about the customer a lot. I think they got confused as to which panel needs to speak about the customer. But I think it raises it raises the critical points. It needs to be around the customer, and it's around that need. To your point also, you need to solve the right problem. So you can have all these different building blocks, but if they're not working in a way that this ecosystem functions around this need, it's not going to solve that. And I think that brings me then to the question to you, Moritz, because you've been involved in this payments industry. I don't want to say how long, because you've been one of the key architects, and everyone knows you. You've been in the trenches with the bank, and now you at the Payments Association, who's actually helped to shape where we are today. I know Geeta spoke about the PIB yesterday, and I think that is one of the critical milestones that is going to take this country forward. And it really is about opportunities for growth and realizing what Werner was talking about. So maybe if you want to unpack that a little bit and tell us about the opportunities.
Yeah, thanks, Chantal, and good afternoon to everybody. A wonderful opportunity to sit here again and talk about this interesting topic. Chantal, if I think about the opportunities in South Africa, it's all about this wonderful technology that's called APIs. and what it allows various institutions to do, how to tap into systems and such. Open APIs is just an API that is written in such a way that everybody can use this, you know, so you can go to a playbook, you can see this is how you need to program for this thing, and it taps into whatever, you know. Compare that then to a closed API environment where you have every entity that wants to talk to any other entity needs to kind of build something bespoke. There's a bespoke API. So first of all, I have to say open APIs or APIs takes away that kind of friction, especially in an interoperable world, you know. So imagine you now a company that have to currently screen scrape to actually provide payments initiation capabilities to customers that interact with you. Now you have to build an API with every single bank to kind of actually get that in place, compared to an open API. So my answer about opportunities is going to be a bit paradoxical, because in one way I'm sad for the opportunities that have already slipped away. You know, to mention one or two, you know, we know that many banks have already built API interfaces to fintechs and SOs and TPPs, you know, that are their specific API, you know, so it's a NetBank API or an ABSA API, Standard Bank API, and so on. It's not an open API that we can all use. So we've already introduced friction, you know. So sadly, I think the ship has sailed in some instances. However, saying that, I think we haven't scratched the surface yet, you know, in terms of the potential that is still out there. There's so much possibilities, potential available in terms of systems or parts of systems interacting with other parts of systems to create wonderful experiences for customers that makes it much more relevant to the customer, that makes it safer even for the customer, that provides the customer with access that they didn't have in the past, and provides them a level of transparency on things that they never had in the past, you know. And you know, we can go into lists and lists of those opportunities. So on the one hand, I'm saying I'm sad for what has already slipped away, but I'm also very excited about what is still possible in the open banking, open API ambit. The one thing I just want to say is, you know, we define open banking very narrow, actually. You know, it's what banks need to open up. I think we have to adopt a wider definition of openness. You know, it's all. I like open finance as a better definition. You know, because it ropes in other users or other entities. You know, non-banks that could also participate in a network. And it's all about what the network can feed off each other from to actually provide a better customer experience.
No, thank you for that. And I think sometimes we all do get a little bit confused with and stuck in definitions of what open banking is, what APIs are, and a little bit of confusion actually happens in the market. There's also a digital divide that exists because a lot of people get stuck in that. Simplified, it can just be that infrastructure, it's a bridge. It's joining these two different worlds, and it's about opening it up in order to actually answer the everyday needs. And the everyday modern needs for some people could be buying that loaf of bread for financial inclusion purposes, or it could be about making your life easier. And I think that is about bringing about that change in industry. So as we've started the conversation, please remember just don't know where the QR code is, to please submit your questions for the panelists. If we do get time, we will be answering some questions in between the conversation. But so please, the QR code is up, so if you'll just submit your questions. But now let's jump into some of the conversation, further into our conversation. So Moritz, you were talking about some of these aspects. So while you're right here next to me, let's jump into some more of it. Now, in order to make this work, it's all based actually on relationships. So if you think about it, if you don't, as a fintech, have a really good relationship with your bank, I think it's going to be a bit of a tough discussion to take this further and to make this real. So it's very important, because what we're talking about is systemic change. We're talking about change happening in order to answer consumers' demand. And if you as a bank aren't going to answer it, someone is going to. So Moritz, what are your perspectives about bringing this change and what customers really want to see in this space?
So I can answer it perhaps in this way. How will the consumer benefit from open banking or open APIs? And I generally see 5 things, that generally permeates from this capability. The first one that one have to pick on is personalization and relevance. So it is really an opportunity to tap here, tap in there, pull things together in addressing a use case for a customer that is really relevant and really personalized for that customer's particular needs or that particular instance in where the customer needs to digitally interact. So personalization and relevance, I would say first. Then secondly, I would say transparency. What open banking and open APIs do provide is much better transparency, perspective on things like pricing, products, how products compare to each other, those kinds of things, So that's the big benefit. The other big benefit that I think it brings to a customer is the level of transparency that they suddenly get on a very complex and convoluted world of financial products out there. And it can really compare stuff and make it relevant. And there's huge transparency. I think then the third one would be convenience. To actually put something in the hands of a customer that is really easy to use and convenient and simple, to use. And I think that partnership between banks and the fintech environment is hugely important. Our members are banks, and banks are good with banking, but and I don't want to say they're not good with understanding customer experiences and so on, but there's somebody out there that have thought about a particular use case just much deeper than what a bank potentially could do in that particular instance, and they can just provide the convenience related to that use case so much better, So convenience, then I would like to add to that. The fourth thing is access. We must understand we live in this community in South Africa where we have in bold letters in our Vision 2025 financial inclusion. If you look at how the FSCA and the Reserve Bank and such interpret that and translate financial inclusion, what does it mean? It is about access to financial services. Now, again, how do you actually provide access to something that a particular customer may not even know about, or that is not really what they need? So the ability to really make things much more bespoke, to improve the access, I think that is a huge part of open banking. The fifth one that I want to then mention is security, and we often don't think about security and safety when you think about open banking. But that's a big part, you know. So these APIs are secure ways, you know, that can be trusted, in which entities tap into each other, you know. And if an entity participates in something where an API is kind of channeling certain information into another situation, use case, it is often in a very secure manner. So I would say those 5 things, you know, is what a customer benefits from open APIs or open banking. And generally that then translates to many use cases around personal finance, management, and so on. You know, there are lists and lists. We can talk a lot more about that.
Yes.
But generally, I would say think about those 5 things when you think about the benefits to customers.
So those are a lot of things, and I'd like to get your views on them, both of you, because I think Moritz touched on a broad variety of topics, and most of them actually covers change. So if you think about it, change is scary for a lot of us, and change, when you step back, some people love change, some people hate it. Usually those 2 people are married to one another, if you think about it in true essence. But besides that, let's think about it in context of the banking world. And some people also like the fact that it's happening. And the thing that is quite scary when you do think about it is that, has it happened before? South Africa, we've got the benefit of looking at the rest of the globe and saying, you know, they've done it before. These are poster children of open banking. So we've got the benefit of seeing other countries. So maybe, Leo, from your experience, what have you seen and experienced that we can benefit from, and what are some good examples we should follow?
It's an easy question to ask. It's a complex one to answer. When you look at what's happened in other parts of the world, right, open banking in many environments, in fact, I would argue probably the most successful ones, has been driven by regulation. When I look, or driven by regulators more broadly. The foremost example of that is probably the EU, where the regulator has taken a very activist role for the last 15 years in driving payment system changes and in enforcing the market to open up to third-party providers for payment services by using open banking and APIs. So much so that they're now in the latest version of the Payment Services Directive, so one of the legislative tools from the European Commission. And I'm not going to get into the details yet. We can talk about it a little bit later as well. But the point, I think, is that the terminology is beginning to shift from open banking toward open finance. So it's becoming even more broad, right, is the point. That said, however, while the regulators have been very active in promoting that agenda within the EU, it's actually met with, I'd say, limited success in terms of actual usage. Typically, it's being used for e-commerce payments. When you look at the platforms that are successful for P2P payments, I'll be honest, it's hard to tell whether they're using APIs and open banking or whether they're using traditional conventional messaging services between parties involved. So sometimes it's hard to tell exactly what's going on. But when you look at those use cases in Europe, they're largely P2P and e-commerce based. When you look at other parts of the world, we're seeing innovation at point of sale. Again, within Europe, we're seeing that in Poland, for example. You're seeing it in India, where the UPI adds this API layer on top of the existing instant payments infrastructure, IMPS. Brazil has something similar going on with Pix. But we've talked about these examples. So I guess what I'd say is the most successful combinations that I think we've seen have been those that combine, well, 3 different things. They combine open banking, so API usage. They combine a genuine real-time payments platform that underpins that, and they also the third key element to this is digital identity. Okay, so that what it means is that if you look, I think I'm trying to remember what the data was. That the most common initiation method in the UPI, what was the most common? But it was I think it's the most common. Was actually biometric. It was using a fingerprint, right? And it's nothing. It's not. You aren't using an app at all. You simply just walk up and you're using a fingerprint on a reader at a point of sale, and that initiates a payment. But that's only possible because of a digital ID solution that sits behind that. And it was actually the result of a 10-year drive, right, toward that kind of solution. I know that's been a big topic here in South Africa as well, in which others on the stage, in fact, and I'm sure many more in the audience have been deeply involved. So I'd say that you're seeing regulation playing a key role, or the regulator playing a key role in doing that. You're also seeing fintechs playing a key role in doing that, in seizing that opportunity, because I think one of the key drivers of innovation, and I don't think this is a secret, I hope I don't offend any of the bankers in the room when I say this, which is that banks, while they can be innovative, typically are pretty slow at doing so. It's part of, I think, being muscle bound a bit, and part of just being that way. But whereas the startup industry, the fintechs of the world, are much less bound by a lot of those same rules, and therefore are able to innovate more quickly. And therefore, the key there, I think, is not to exclude them from that because they have to follow a different set of rules, but rather to harness that innovation, to harness that power, right, and see them as potential collaborators rather than as enemies. And I think that's the key markets. The markets in which we're seeing this happen are exactly the markets in which that's succeeding as well.
Definitely, and it brings us back to the initial point we spoke about in the beginning about this ecosystem. So you need to get that ecosystem firing. So each component bringing their value in. So thank you for that. And I think it's important, and bringing you into the conversation, Vardner, on what Leo and Moritz have been talking about. And I'm actually going to bring in one of the questions that I see here into your answer. So catching you on the fly, you know how it works with a panel. You always have to be ready for it. But if you had to think of what Leo and them were also saying, and lots of people are talking about open banking under the guise of open banking, but what is a real open banking system? And then also just to add, the question from the audience is around, on this topic of open banking and APIs, what is the view on how we manage the governance framework on these APIs and open banking frameworks to protect the customers? So if you think about open banking, what can we do just to enhance the protection?
And thank you for the question from the audience. I'd like to just quickly link up with something that Moritz talks about, those 5 characteristics that you mentioned, and then how that has to do with this notion of change. So here's another piece of good news for the members in the audience, particularly if you're not a technical person yourself, which is that, and I'm sorry, I'm not going to remember all 5 of them, but Moritz, you mentioned personalization, security, convenience, all of those. And then this idea that you mentioned as well as, you know, of how you don't want to have to do all of these bespoke integrations to different banks. So the wonderful news, the good news for everyone here is that the way that modern internet APIs work, the fundamental technology that underlies them, makes them very suitable to incremental change. So if your IT team are telling you, oh, you know what, you know, if you need us to make this change, it's a big deal, there's probably truth in it in terms of the internal systems that they need to deal with. But when we're talking about that interlinking between whether it's a fintech and a bank, or a bank and an insurer, or whatever the thing that those are, the reality is that modern internet technology, and when I say modern internet technology here, your IT teams might talk about stuff like RESTful and JSON and OAuth. You can ignore all of that mumbo jumbo that they're talking about. But the important thing to understand is that these integrations have become simpler to adjust over time. They are, in a sense, capable of being personalized by the user. So a fintech, a well-designed internet API, the fintech to an extent can personalize it. So they, in the same way that your end consumer gets a sort of a personalized experience, your partners can have a personalized experience. And they allow for incremental change much more easily than previous generations of technology. So it's possible now to, even if we have a situation currently where they say there are banks who have instant EFT APIs, and we then, something that I'm extremely excited about is, you know, we then get an industry, for example, request to pay. That gap of the incremental change that's needed for those partners who are integrated with those banks, that gap from a technology perspective has shrunk radically. So it's become so much simpler to incrementally move in that direction. Then, in terms of then the question of what then constitutes a real world open banking system, and I think here I should limit myself, and kind of stay in my lane. The way I think about it is, let's say, in three parts. The first is, I'm a huge believer in scheme rules. I think that when we talk about interoperability, technical people like myself like to get into this idea of, we want systems to be able to interoperate with each other. But the scheme rules aspect is actually fundamentally more powerful to interoperability than what the technology is. Because what the scheme rules does is it allows for a consistent consumer experience. It promotes the idea of a consistent, transparency you mentioned.
Yeah.
That is such an important part of this. And to me, scheme rules is like the ticket to getting that transparency. So I've now lost my train of thought, but so what constitutes a real-world open banking system? My opinion, scheme rules. Secondly, to me, at a technology level, there is then it requires an agreed upon set of practices, a way that technically we're going to work with each other. And the good news again here is that we don't have to solve this. The internet has solved it for us. All of these technologies exist. And then what I do think does need to go on top of the technology, and something which is a really difficult problem to solve, especially for technology people as well, is you do need a semantic language that sits on top of it. So a language that these systems are going to use to speak to one another. ISO 222 is a good example of this, and there is still a debate ongoing as to whether it's appropriate for high volume payments as a language. But I do think that is very important. So out of all of those things, the two that are, to me, most important in terms of what would constitute an open banking system is scheme rules, and then a semantic language that we all agree that we will speak in system terms to each other, so that we get that consistency, transparency, predictability, security, and so forth and so forth.
Mm. I think you make very good points around that. I do think the rules, the structure, that governance, putting that in place is critically important. We've seen in many countries how that has actually contributed to progressing it. It actually leads to one of the questions that speaks about the regulatory-driven approach in many countries has actually expedited it. And Leo, you also mentioned it, where South Africa has followed a very market-driven approach. The question is also talking about, are we a little bit behind? I'll ask Moritz to touch on that a little bit in his answer also when we feed to your question. But to add to your point, Werner, also I think the key thing behind it, besides the technical elements of open banking, is obviously around the ethical use of the data and the customer. The customer is core to it, because the customer is the one saying, yes, you can use my data and how you can use it. So I think that is the critical component that it obviously all revolves around. I don't know, Leo, is there something you want to add to that?
I think for me, there was a fantastic discussion, by the way. So I think, and I think a lot of important points here. For me, there's one important point I think that we haven't mentioned yet, which is the business model that surrounds this, right? And that how it is. I think the most challenging part of this for banks and financial institutions more broadly is actually the business and the operating model that you have that surrounds this, right? Which is how is it that you can store and retrieve customer data in a way that's actually useful, using a common semantic language, so that it gets fed into a common technical standard that others can consume and actually use to build innovative services on top of that. A second point, I think, is what it implies an entirely new strategic outlook for a bank, right? How do I craft products? How do I distribute those products, right? It's very challenging to move from the vertically integrated banking model and payments model that we have today, where I can't walk into a bank branch and buy another bank's payment product. I'm not even sure what that would even mean okay, given our current paradigm for payments product development and distribution. And I think the third major thing that it implies is moving an operational environment from, normal business hours, batch processed, to a 24/7, 365 kind of environment, because that's the way in which people want to make payments in the current world, and that's the way in which those innovative services are going to be developed. So I think that those three challenges for a financial institution are absolutely critical here as well.
Definitely, and talking about the data, that's exactly what fintechs have done. Banks have wealth of data, and fintechs have actually taken advantage of that, saying, well, we know how to process it, we know what to do with it, and created opportunity out of it. So let's move on to local is always lekker. So let's talk about the local context. And Moritz, and I'm going to feed into this question that spoke about, are we too late in the game? What are we actually going to do to catch up? And why is it, we've been on this journey for a very long time, is the question from Anonymous. Why is it taking so long? But if we talk about the South African journey, what are we going to do to catch up and actually get involved in this?
Yeah, Chantal, I think, obviously it starts with regulation, so what I think we will see is that both the FSCA and the Reserve Bank will promote the agenda of open banking, more open interactions, use of open APIs and such. But I don't think they're going to be heavy-handed about this, and this is a personal opinion, it's not a PASA opinion. Because of the fact that we may have missed a few opportunities already. And I spoke to one of our member banks outside just a little bit earlier, how difficult it might be to unbundle things now again, to actually go back to a open standard or an open API and so on. I also think around new systems, the regulators might be apply more moral suasion that we actually get to open APIs and such, So I think around a new system like PayShop and what it can do and so on, and I for a moment want to extend openness also to other things, like for instance QR codes and so on, that we have a single standard, and that we use that opportunity of a new system to actually apply that standard. Currently we have a QR standard in South Africa, but it's not mandatory. This could be the ideal place to say it will be mandatory, in that new system to actually use something like that. Secondly, I think it comes down to mindsets then, so open banking, open minds. If you look at the landscape, the banking landscape, the way in which we build systems and the choices that we've made in the past, it has been pretty much always with the mindset that it's better for me as a bank to have control over certain things. And I can give you an example. We've built a decentralized proxy system. Each bank wants to have control over their part. We've built a decentralized mandate management capability in DebitCheck. Each bank wants to manage their own mandate register. So there is something about how the South African banking industry have in the past thought about these things and the risk of actually let go. But I also think we are at the cusp now of opening things up. I sense that in many conversations that I've had with banks, where we are seeing opportunities, even if we've built these things in decentralized manners, where we can start to tap into certain things and tap into each other almost, so to say. There are many opportunities then, and I think that brings me to the third thing is, for us to get it right, we have to identify the key problems that we want to solve, and build the open APIs around what is currently big problems for us to solve and let's then agree around this. We are going to build something that would support us all. If I can give you an example, in the debit system, we currently have the phenomena where payers dispute, reverse their payment systems quite a lot. And we've got a capability on a platform that we've built in Banksurf called Craft, where we actually see, this propensity of certain individuals to be almost serial disputers, and so on. What about building APIs to that kind of data and information and so on, so that lenders of money or providers of services and so on can actually get a sense of what is the propensity of a particular person to pay back. It's data that we do carry, but it's not been made to use. But the point is, identify the real problems. I'm not saying this is the problem, but this is an example of one. And build your open API, or use that as opportunities to actually go and open up the system.
Definitely, and I think you mentioned some fundamentals, but it's easier said than done. It's about making it real. And in our last 5 minutes, I think let's talk about making it real. So Werner, if this was your elevator pitch, and you've just got bankers in front of you. I'm classifying all of you as bankers today, even though we know not all of you are. But if you had to say, listen, what are the benefits to the whole ecosystem? I know Moritz unpacked it from a customer perspective, but what are the benefits for non-traditional, for the traditional players, if non-traditional players enter the ecosystem? What would you say? Here's what do they call it? The dragon's den. They're sitting in front of you.
Thank you. I'm happy to do that. And can I be so cheeky as to suggest to Moritz a possible...
Go for it, please. Okay. He's here
right.
too. He's part of it.
So why should you care about this? The fact is, it's faster, it works, and you'll be able to solve more precisely your client needs. It just is as simple as that. That's just the reality. We know it works. I'm very much with Moritz in terms of saying that where those innovations have happened in a way that is closed loop, man, it would have been so much cooler if it could have been done at an industry level. So I'm very strongly in favor of that. I feel, and maybe Moritz can reject me here, but I feel the place where the opportunity is right now to apply this, for example, is that there is a need for real-time collections. And I know we've been talking about request to pay. I'm a huge proponent of request to pay. It's at our doorstep. We can do it. And every indication is that it can be a huge success. So that's my little plug for request to pay.
I like that.
Awesome, awesome. So any support from the audience? Yes, no?
Thank you very much. Let's do it.
Okay, so you obviously did
support
well.
From stage 2, I think.
Yeah, stage 2. Okay. So Leo, we can end it off with from a comment from your side, because you obviously go into the various markets and you can sit there and say, listen, this, that, and the other. But if you had to give us any advice as South Africans, what should we not get wrong? And what is staring us blindly in the face that you just want to say to us, please, guys, don't forget about this?
Oh, that's a difficult question. I'm gonna start by telling a story, and I know I've got limited time, so which is a colleague of mine. So I live in Germany. For those of you that don't know, okay, so a colleague of mine who also works in Germany but grew up in the United States was renovating his apartment in Berlin. Had asked his father to borrow some money to help do that. And his father or I think actually probably it was my colleague who did the research for his father, but they decided they were going to use a particular remittance provider to do this. I won't name names during any of this, okay? But so they created an account in the remittance provider. The remittance provider then says, okay, you're transferring X number of US dollars, the X number of, or Y number of euros will end on the other end. We'll be charging you a fee of X, or Z in this case, yeah. and then uses an open banking service to actually check his bank account balance with his permission. So they know he's good for the money. Yeah? They then issue a debit order to his father's account, transfer the money on their own books to their European entity, drop it into the European real-time system, and the amount, and this is, I'm not kidding, my colleague tells me the amount hit his bank account, and he had notification in his banking app faster than his father's voice could be transmitted over WhatsApp. He says it literally took less than 3 seconds after his father hit send for the money to actually appear in his bank account. Now, to Vanna's point a minute ago, what a fantastic customer service, that customer experience that is, right? If you look at this from the customer's perspective, it provides benefits that are so glaringly obvious, right? That they simply can't be ignored. And so my message is, if you don't embrace it, right? It will be done to you, right?
Yeah.
Either you do it, okay, or someone else is going to do it. So you might as well embrace the inevitable and embrace a little bit of creative destruction.
Yeah.
Exactly. Thank you.
Can I add on to
You can.
what Lou says? I know we're out of time actually, but for me, where the world of digital interactions is moving, we are moving into complex combinations of things to actually solution a need. And such a wonderful example for me, I want to mention it. I don't know if Andy sits in the audience here, and I forgot the name, but it's an extension of their pay to capability, is a buy now, pay later capability, where the merchant is tapping in with an API, where the bank allows a mandate to be created and do the collection at the end of the day, and where a credit provider can say, I will provide the credit for whatever you want to buy here. So imagine that complex network that you now need to kind of pull together. And the only way you can do it is actually through open banking, and APIs and those kinds. So that's where the world is going. We need to kind of get our heads around it. You're going to only resolve these complex needs through complex combinations of things that you cannot combine in any other way than through APIs and complex combinations of certain things.
No, spot on, spot on. I fully agree. And I think the one element just not to forget is that although it's open banking and although it's a digital world, there is still this digital divide. So you need to give analog access into this open banking world while this digital divide is happening in order to encompass the entire community. But I just want to take this time and thank this fantastic panel. I actually thought, are we going to have enough questions? We've got far too many questions, so apologies, we couldn't get through all of them. We try to incorporate them, but thank you so much for your time and appreciate it. Thank you so much.
Thank you.
Thank you.
Thank you.